Welcome back. Still with us in the studio, Shaun Latter, Wealth Manager at Quaestor, and Paul Roelofse, Consumer Advocate at the Financial Planning Institute. We're talking about financial planning on the back of a document that came out of Canada from Morningstar, talking about the value of planning. And they start off by saying, for decades now, investors have wondered about the value of financial planning, specifically whether it's worth paying somebody to mastermind a course of action. They've come up with an absolute figure, and I think it's probably the first time. You gentlemen would be able to tell me if I'm right or not, if it is the first time, but they're saying that the value is 1.8% per year, bearing in mind that's in the Canadian market. Firstly, Shaun, is this the first time that there's been an absolute value that's been put to it? And secondly, what would you reckon that value would be in the South African market, because we are in different markets?
Absolutely. Jeremy, I think certainly from my point of view, that is the first time I've ever seen a quantitative research paper that's come out, and it's also very independent. So it's not a financial planning practice coming up and saying, gee, this is what we can provide. It's independent. It's the first time it's quantified. When we look at the South African market, as you rightly said, from a Canadian point of view, in any developed market, we know that the nominal returns are slightly lower than what you'd get in developed markets. So when they're relating to a return of 1.8% as an excess return over what the average would be, I would estimate that in South African terms, we're probably looking at closer to 2.5%. And that would be a reasonable figure to look at. I think another way of looking at it, which they put in there, and we don't have to talk about 1.8 and 2.5 anymore, is to say from a retirement income point of view, they've seen an uptick of 29% retirement income, which I think is something substantial.
Yeah, and that, I take it, is directly attributable to the financial planners doing what you two and all the other financial planners do, putting these plans together. What you're technically saying here is that you could earn 30% more out of your retirement.
Very much so. It's actually saying that with the appropriate advice, with the right sort of financial decisions, you can actually squeeze out that X factor, the gamma as they call it, in that you could speak to tax efficiencies, you can get a far better drawdown from your retirement vehicles, and by making those right choices, you can actually improve on that particular ratio.
That's something you're very, very big on, is this whole tax efficiency thing.
Very much so.
And I suppose for lay people like me, we don't always get that. Why should I not just do this? You always harp on about no. What is the tax liability here? Do we ignore that to our own detriment in most cases?
Most certainly, and especially it's more prevalent now when returns and yields are lower. You've got to try and squeeze out as much positive yield as you possibly can. And again, if you focus on the tax efficiency, for example, it just gives you that extra yield. And it could be a simple solution, not seen by the consumer, in that you could
like what?
Make use, for example, of a wrapper, which has tax efficiencies. An endowment shelf, for example, is a very useful vehicle to have in one's retirement portfolio, because it offers certain tax efficiencies which can be balanced and counterbalanced by investments that are taxable. And when one works out the total net after-tax income that's coming into the household using a variety of those types of wrappers, you can actually reduce the average rate of tax in one's retirement, for example.
Pravin Gordon's not going to walk in here now and start wanting to put handcuffs on you, is he?
Not at all. Again, that's the value add working with a certified financial planner. We are experienced. We understand the way to do it, and certainly don't tread outside the regulations at all.
Where do you guys? I mean, you were just talking about the amount of unit trust funds around. How do you find time to research all this stuff? Because there is just so much information out there, Shaun.
Look, Jeremy, from our point of view, and it's a personal point of view, there's two areas that I believe one should be looking at, and primarily in my business, we make use a lot of passive and index tracking solutions. Right? So that takes the fund manager to a large degree out of the picture, and we find that on average they will beat the average manager over time. That's the first thing. And the second thing is, if you do want a certain amount of active management within your portfolio, there are research management companies. That's all they do, is go and do manager research and put together different managers to complement each other for different asset classes. So to my mind, that would be the only sort of prudent way to go about it.
You?
Well, that's the beauty of our business too. I mean, it's different strokes for different folks, but there's also different views and different styles. I would certainly look at diversification across certain managers and spend a lot more time analyzing the manager rather than the fund, working on his styles and blending them across 3 or 4 or 5 different weightings. And if you follow, for example, a balanced theme, whereby you're going to choose some flexible asset allocating managers. That's their mandate. You give them license to actually choose what types of assets to have and what weightings to hold. And if they've got a good strong pedigree and we can get the right mix of those managers into one fund, you get the advantage of all different styles arriving, at a similar destination into the future. So you've got some stability there.
Is this investment thing as personal as that? Is it up to the style of a manager?
I think it can be. And one of the things that I'd encourage, if you do sit down with a CFP professional, one of the first things you need to ask them is, what is your investment philosophy? Because I think there are a number of ways of looking at it, and I'm not necessarily saying that mine is the absolute best. I certainly use it because I have a certain level of comfort and confidence in it. But if it doesn't agree with you or any of my clients that come through my door, then they need to find somebody else.
But how do you... No, wait, hang on. No. Stop. Whoa. How do I, Jimmy here, off the street, sit down in front of you and say, what's your investment style? Because you could tell me anything and I wouldn't understand a word.
You're quite right. And again, that's the starting point. I think the average consumer doesn't really understand investment strategy. I mean, that's enough to frighten people away.
No, we don't.
And that's
we
really
even hear the words investment strategy and we go,
it's too strong. And what we've got to do is really break it down into bite-sized chunks to get to understand it. Look, there's a process, and let's go back to the financial planning process. It starts to understand what you have right now and really establish that as the basis on building upon. When it comes to investment strategies, I think a lot of consumers rely on the financial advisor to help them understand and gain some sort of knowledge as to routes to follow. We will also need to take out the word best in the financial plan. There's no such thing. We're only going to know what's best when we get there and look backwards. And what we have to really focus on is more of an appropriate solution, and it's different strokes for different folks. So when it comes to investment strategies, there are no rights or wrongs. As long as the outcome, the actual yield, is achieving a certain expectation which addresses the needs of the plan, then we're on course. But if you're going to chase the better one, the best one, I think you might be a bit disillusioned along the way. You're going to find that you'll be losing focus.
I think just on the back of that as well, Jeremy, I think while investment styles are there, and there's a number of different ones, it is by far possibly the smallest impact in your overall financial plan and financial planning process. So there's far bigger boxes to tick before getting to that than worrying about that. And quite often, that's the end result.
But how do I choose the financial planner?
How do you choose the financial planner? There's a couple of things for me. Number one, as we've said, I think you need to look for a CFP.
You have to say
professional.
CFP.
Let's get that, because I think at the end of the day, you wouldn't go to a doctor unless they're qualified.
Yeah.
After that, to my mind, it's really around sitting down, have a cup of coffee with that person and kind of say, can I work with them? Do they make sense?
Well, if the person said to me, let's sit down and have a cup of coffee, I'd probably go, no. Well, then I'm not going to go with that financial planner because I'd rather go and have a cup of a pint of lager.
Well, there we go.
Yeah, you see. So that's one of your first things, okay? If the financial planner says, let's go and have coffee, say, no, drop him. What is this? National
Financial Planning
Financial Planning Week. I got this sent through to me by my producer. What is it all about?
It's an initiative that we've launched at the Financial Planning Institute. We've realized that
Firstly, what does the Financial Planning Institute do?
Well, it's an institution which is voluntary for a start. We all belong to it as voluntary members. You know, you get the Financial Services Board, which has created a regulatory environment for us to comply with and work within, and that's a must-have. But long before that, we established an institution called the Financial Planning Institution. Okay. And it's being voluntary. We abide by a stringent code of ethics and standards, which are monitored and governed by our board, okay, by the institution itself. So we've got to align ourselves with that and do the right things all the time, every time. And then secondary to that, we've also got the Financial Services Board obligations to comply with as well. So we present to the public a qualified, certified financial planner professional who's gone through stringent qualifications to achieve that international recognition. It's an international qualification. Mm-hmm. And then there's this continuing development that he has to go through to maintain the license or the actual qualification. And that's all monitored by the Financial Planning Institute. So what we've realized too is that we've raised the bar quite high above the sort of must-have with the FSB in that sense. But it also takes us away from the consumer in terms of being fairly intimidating. And what we want to try and do is reach out to the consumer and say, hey, we are people, we want to talk to you, and we understand that perhaps we are a few and far between, and we want to reach out to you.
So what are you actually doing in this week?
What we'll be doing in the National Financial Planning Week, which starts on the 26th of this month, right through the week, we're going to offer the services of certified financial planners to the public for free. You'll be able to go to our website, which is the FPI website, www.fpi.co.za. And on that landing page, you'll clearly see what the program is all about and where to find a certified financial planner.
And you can go to those planners
free of charge.
At no cost.
Mm-hmm.
And find out more about what they can do.
There are a list of participating practices around the country.
Yeah.
And all you need to do is go on there, contact the person who you want to is perhaps closest to you in terms of area, and book an appointment, sit down with them and have a chat. Yeah.
This could open doors to a whole lot of different things. The website, once again, www.fbi.co.za. Don't go to www.fbi.com. It'll probably take you to a very different website in America, and you won't get any financial advice there. Gentlemen, thank you very much for your time.
Thanks, Jimmy.
Nice to see you both again. Shaun Latter and Paul Roelofse. It'll be nice to see you again the next time around. Until then, bye-bye.